Hello and welcome to this new episode of the Eigen Values podcast. This is an audio version of the Eigen Values Substack, can be found at davidturver.substack.com. This time we bust the fossil fuel subsidy myth by looking at the alleged subsidies and comparing them to the taxes levied on energy. If you enjoy this podcast, please like, share and subscribe to receive more content. Whenever discussing renewable subsidies on the internet, there's a form of Godwin's law that means it's inevitable that someone will come along and say, actually, fossil fuels are subsidised more than renewables, or worse to that effect, as shown in this example. I've often thought this claim to be bogus, but until now I've never dug into the detail to prove the case one way or the other. It's worth remembering that energy is one of the elementary foundations of modern society. Almost any activity you can think of requires energy input of some type or other. Factories need energy to make things, offices need energy for heating, lighting, cooling and running computers, as do our homes. Hospitals need energy to run operating theatres. We need energy to go to work or visit friends and family, whether we travel by car or train. We need energy to do the family shopping, to cook, to travel to the gym, cinema or restaurant. Energy is fundamental to every economic and social interaction. So it wouldn't be surprising if energy were subsidised. Expensive energy is like a tax on our very existence, so taxes on energy act as a drag on society. It's therefore vital we get to the bottom of the claimed fossil fuel subsidies in the UK. So, what is a subsidy? In simple terms, a subsidy is when the government pays or mandates consumers to pay for an activity to occur that otherwise would not happen if the market were left to its own devices. Examples might include grants to theatre companies or indeed awarding CFD contracts to offshore wind. A tax is where the government levies an extra charge on a transaction or activity. For instance, there's value-added tax, levied at 20% for sales on most goods and services. There are also special taxes such as levies on alcohol and tobacco, and of course income tax. Reduced rates of tax are still taxes, quite the opposite of subsidies. If there were no taxes and no subsidies, that would represent a neutral position. When it comes to oil and gas, the definition of a subsidy becomes a little murky. The IEA defines fossil fuel subsidies as measures that reduce the effective price of fossil fuels below world market prices. It's certainly true that some countries, such as Russia and Iran, do subsidise hydrocarbons according to the IEA's definition. Interestingly, the UK government said in 2021 that the UK does not give any subsidies to fossil fuels. And interestingly, the UK does not appear in the IEA's top 25 list of countries that subsidise fossil fuels. See Figure 1. Given the government's statement and the UK not appearing in the IEA's list of top subsidisers, we need to look at where these claims of massive subsidies come from. Unfortunately, the idea that the UK heavily subsidises fossil fuels has a long history. There's a 2013 article from The Guardian that claims the UK is subsidising its coal, oil and gas industries by $4.2 billion or £2.6 billion per year. The Guardian has produced similar articles over the years, such as one from 2019 claiming the UK leads the European Union in giving subsidies to fossil fuels, and another in 2023 claiming the UK government has given 20 billion more in support to fossil fuel producers than those of renewables since 2015. Note that they use the words support and subsidy almost interchangeably, eliding so-called tax breaks with subsidies. The Guardian is not the only publication to make this type of claim. Politico also got in the act in 2021, claiming that Britain supports the fossil fuel industry through tax breaks and subsidies to the tune of £10 billion per year. When digging into the articles, you can see that their definitions of subsidy includes consumers or producers paying less tax on fossil fuels than the authors believe appropriate. At the risk of repeating myself, paying less tax still means the activity is taxed, which is the direct opposite of a subsidy. Paying less tax than an arbitrary level is not a subsidy. Even paying zero tax is a neutral position and certainly not a subsidy. So how big are these alleged fossil fuel subsidies? The Politico article mentioned above refers to data from the OECD to support its 10 billion claim for 2020. By digging into a more up-to-date version of the data, we can evaluate the veracity of the claims. Broadly speaking, the subsidies or support mechanisms are broken into two categories: producer subsidies and consumer subsidies. Using the latest data for 2022, the total alleged support for oil and gas producers amounts to £3.1 billion. The largest component of this total is £2.25 billion of tax relief for decommissioning. This arrangement allows companies to claim capital expenditure connected to decommissioning old fields against corporation tax. For oil and gas companies, decommissioning their fields is a normal business expense. In normal company taxation, business expenses are deducted before calculating taxable profits. There's nothing to suggest that deducting decommissioning expenses before calculating taxable profits is anything other than a normal business practice, and it's certainly not a subsidy. A further £0.85 billion of support is alleged because companies can treat investment in new fields as a business expense to set against the supplementary charge that oil and gas companies are subject to on their profits. Again, this is not very different to the investment allowances made to companies in other industries and does not amount to a subsidy. Using the 2022 data again, there's about £12.9 billion of claimed routine customer support for fossil fuels. £7.8 billion of the total comes from consumers being charged 5% VAT on their domestic energy bills and not the normal 20% rate. It should go without saying that 5% VAT is still a tax, quite the opposite of a subsidy. A further £3.5 billion of the alleged support comes from fuel duty relief, where some types of fuel pay less duty for some uses than others. Again, some fuel duty applies, just not the full rate. This is not a subsidy, it's just paying less tax. Another £1.4 billion of support comes from reductions to the climate change levy. Ironically, much of this support is granted to organisations with climate change agreements to reduce energy use or CO2 emissions. In the crazy world of climate activists, paying a lower climate change levy by agreeing to reduce emissions amounts to a fossil fuel subsidy. Finally, a further £0.2 billion of consumer support comes through the warm home discount. This is a reduction in energy bills for older pensioners and other vulnerable people, and it's probably justified to term this a subsidy, although it applies to gas and electricity from all sources, including renewables, not just fossil fuels. So out of a total of 16 billion of supposed subsidies, only 0.2 billion could be reasonably termed a subsidy, and an indirect one at that. However, there's a but, and it is quite a big but, because we also need to consider one-off consumer support schemes. There was 19.4 billion on the energy price guarantee for domestic consumers, 2.6 billion on the energy bill relief scheme for non-domestic consumers, and a further 2.6 billion on the energy bill support scheme. These schemes amount to a total of 24.6 billion, and there's a case to classify this money as some sort of subsidy. However, these schemes should probably refer to as indirect subsidies because they covered all forms of generation, not just fossil fuels. Note that as Figure 1 showed, this support did not meet the IEA definition of a subsidy, or the UK would have appeared in about 12th place. We should also bear in mind these schemes were one-off responses to a crisis and are no longer in operation. If we're to get a complete picture, as well as considering subsidies, we should also consider the taxes the UK levies on fossil fuels. These again can be split into two categories: producer taxes and consumer taxes. Oil and gas producer taxes combine ring-fence corporation tax, the supplementary charge, which is an extra corporation tax, the remains of the petroleum revenue tax, and the energy profits levy, also known as a windfall tax. According to the OBR, the total receipts for these taxes rose sharply from 2.6 billion in 21-22 to 9.8 billion in 2022-23, which is the most comparable year to calendar year 2022. Those who claim we subsidise fossil fuels are effectively saying we should increase these taxes by the 3.1 billion support identified by the OECD earlier. Once again, paying less tax than some arbitrarily defined level is not a subsidy. The ONS publishes the cost of environmental taxes, many of which can be characterised as consumer taxes on fossil fuels. These include direct taxes on fossil fuels that raised the following amounts in 2022. Fuel duty raised 24.8 billion. Those who say we subsidise fossil fuels would add the £3.5 billion we mentioned earlier, identified by the OECD, to this already massive tax, making it much more expensive to move around. The emissions trading scheme raised 4.6 billion, including both EU and the UK schemes. The climate change levy raised 2.1 billion. Those who claim we have massive fossil fuel subsidies would add the 1.4 billion CCL reductions identified earlier to this already significant tax, effectively cutting incentives to reduce emissions. In addition, there are indirect taxes on fossil fuels that raised even more money in 2022. The road fund licence raised 5.2 billion. Remember, this tax doesn't apply to electric vehicles yet, so is essentially just levied on fossil fuels. The air passenger duty raised 3 billion, and the plastic packaging tax brought in 0.3 billion. Plastic is, of course, made from fossil fuels, so this is effectively another tax on fossil fuels. This gives a total of 31.5 billion of direct taxes and a further 8.5 billion of indirect consumer taxes on fossil fuels. Finally, VAT is levied on domestic energy, petrol and diesel, which is another direct tax that falls on fossil fuels. However, I can't find a reliable data source that gives an analysis of VAT receipts arising from hydrocarbons. So at this point, we should simply note that VAT raises about 160 billion in total each year, and fossil fuels will contribute a significant portion of that total. To conclude, we can see how all this adds up in Figure 2. First, we can dismiss the so-called subsidies for producers as normal business expenses deducted from taxable profits. We can also dismiss all but the 0.2 billion warm home discount ongoing consumer subsidies as simply lower taxes for some uses of fuel. Tax is still tax, and lower tax is not a subsidy. If we're generous to those who claim we subsidise fossil fuels, we could note that in 2022 there was about 24.6 billion of one-off indirect subsidies. However, these schemes are now no longer in operation. On the tax side of the ledger, we have 9.8 billion in producer taxes, 31.5 billion of direct consumer taxes, and a further 8.5 billion in indirect consumer taxes, plus an unknown amount of VAT. Even in an exceptional year, when the various energy bill support schemes were in place, taxes exceeded the alleged subsidies by a very wide margin. Now the energy crisis has subsided, we are left with just £200 million of indirect subsidy to help the elderly and the most vulnerable with their energy bills, offset by close to 50 billion of direct and indirect taxes as shown in Figure 3. However, we should note it's likely that the consumer tax take will fall with lower oil and gas prices. Production will likely decline due to a lack of investment, driven by the 78% marginal tax rate on profits, leading to a bigger fall in producer taxes. However, on the other hand, it's rumoured that the Chancellor is going to increase fuel duty in the budget. High taxes mean high prices, which in turn function as a tax on the rest of the economy, leading to steady, inexorable decline. If we want a thriving economy, we should be cutting taxes on energy, not increasing them. Note again, lowering taxes is not a subsidy. Zero tax is not a subsidy. It's a neutral position. Remember this when some activist claims we subsidise fossil fuels. Thank you for listening. Please like, share and subscribe to this channel to receive more content, or sign up at davidturver.substack.com.